Hey, this is Nick with Us versus Herd. Today I want to talk about volatility and why it shouldn't surprise you. On my screen here I have the last year, 2017, and as you can see down here we have the implied volatility for the year, and we were sitting at record lows all year and just recently just started to spike. But I just wanted to kind of compare a couple of years. A lot of people are new to trading and they've never seen volatility. If you just started trading the last year, you'd never seen volatility. We pretty much just went straight up. You know, if you look at 2017 as a whole, you know, we were pretty fortunate that, you know, if you weren't a bull, you know, you got shaken out pretty hard. And if it on the days that it did dip, if you had enough time on your options or on your options trades, you could pretty much turn that trade around for the most part. So trading was pretty easy. There were a lot of lazy traders, and you know, it was a very bullish market. And there was really, I mean, there was a few dips here, but this, if you look at the dips here compared to the dips that we had recently, or the selling, I mean, in comparison to recent, you know, we went from 2872 all the way down to 2600. You know, almost a 300 point drop in a couple days. And here the dips were 2400 to 2350, so 50 point drops compared to 300 point drops. But let's go back. If you're new to trading, let's go back to a couple of years. I have some years pulled up here. 2017, you know, pretty much a straight line up. I have pulled up 2012 through 2017 just to kind of give you some comparison here. 2012, and you can see here, is a very two-sided market. You know, it went up in the early months, then over the summer, we kind of went right before summer, had some major selling where the market almost went negative for the year, and then ripped up to new highs. But as you can see here, this is what volatility looks like, and you can see the implied volatility down here is not sitting at lows. You know, it's pretty high up here. You know, same thing with 2013. 2013, a little less choppy. This is a very bullish chart, as you can see, kind of like the one we have in 2017, but there's some more dips here. So it went from 1650 to, you know, 1500, 1575, 100 points. I mean, this one's pretty much comparable to 2017, but there was some more volatility, more than, you know, what we're used to seeing in 2017. And then we go to 2014. You know, this is also a bullish chart, but I mean, when the selling accelerated, as you can see here, it really took place for, you know, a week or more, week or two. And then if you look at 2015 is probably the best chart out of all of these, because it really, the stock market went nowhere. It started here at 2050, ended at 2043. And this is kind of like the Iron Condor year, where you kind of just, you know, went up, went down, went up, went down, except for in August here of 2015, we ripped 2100 to 1800. So I mean, drops like these are not surprising. And as you can see here, every rip got sold. Every rip got sold up here. I mean, every day, look at this one right here. Green, red, green, red, green, red. You know, every pop was getting sold. You know, obviously it was still getting higher, and the pops were getting higher. But you know, this is what volatility looks like. If you're not sure, and you know, we had a very, very bullish portfolio, because every time we tried to short in the 2017, it came back to bite us. So obviously we lost some money in the last couple of days, but we're realigning a portfolio to kind of handle more volatility, because it looks like we're entering into a new era. When a market changes so drastically, I think we're entering into a new era of volatility, where we're going to be experiencing more of a two-sided market versus a one-sided market. And 2016 has some major selling as well, but you know, overall bullish. But as you can see here, there were some dark days, you know. And I think that in 2017, let's go back to 2017 here. there really wasn't that much drama. I mean, there was some stuff with politics and Trump and stuff like that, but really, a 50-point drop is nothing compared to what I've just shown you in the years prior. So, keep your head up. We just experienced one of the biggest selling, the most selling we've seen in years. These drops are more than all these drops probably put together here in 2017. And we don't know. I mean, we've been in a bullish market since 2009, and it's hard to say if this is going to enter us into a bear market. I mean, obviously when things go bad, that people kind of always get kind of scared, saying, hey, we're going to enter a bear market, but we could not. This could bounce up. We can, if you look at like I said, in 2015, it could be a flat year too. I mean, we ended up here, a lot of drama, but ended up in the same place. And analysts on CNBC or wherever, they think that they try to guess the best they can, but at the end, nobody knows. Warren Buffett, he doesn't know. He's aligning himself where he can handle this, obviously, but at the end of the day, no fund knows, no guru knows. You just got to make sure you save your portfolio, you hedge your portfolio, and you handle risk appropriately. So if you lost a lot in the last couple of days, keep your head up. Definitely try to realign your portfolio. I've been doing the same thing. We lost about $1,000 or so in the last few days, just because we had such a bullish portfolio. But we're working through that, and we'll definitely bounce back. It's not the end of the world. Just learn from it and adjust your portfolio. So if you have anything to add to this, comment below. I just thought this was a great reminder of where the market's been and what it's doing now. That implied volatility, it's normal. It's something we just took for granted for so long.